When should I buy? I have found some high quality stocks, but is the correction over? We're just down 10%, 15%. Can we go 20%? Will we be in a recession? Or was it just a growth scare? And this is the bottom actually, and it's going up from here. Let's answer your questions, guys. It's emotional. I get it. I have emotions too, but I have a system that makes sure that I don't decide based on my emotions. I'm Italian, I have a ton of emotions, but I don't allow emotions to take the decision, right? The decision is made by the process. So, Simon, what's the process? Here it is. The question is, when should we buy? And we were guessing around. So I went back historically and analyzed January 2015 to 2020. What happens when you buy the S&P 500, just the broad market index, the top 500 companies? What happened when you buy them, in which stage of the market? And what happens with your win rate in each stage of the market? We will go to the history, to the numbers, and come back to your portfolio to answer the question, have we bottomed? And should you buy now, this week, or should you buy later? So the first thing that I want you to really take seriously is the question of volatility. Volatility is measured with the VIX. What's the VIX? Let's go to TradingView and add this guy here to your life. It's the Volatility Index. Right now we are at 21%. This is where we are at the VIX, and you see here that I have my checklist of when I buy, and it's always here directly in TradingView. Now let's go back to the Sprint Club, because in the Sprint Club I have prepared for members this cheat sheet on when to buy. Because we only select a few high quality companies in the Sprint Club. I limit myself to 12. Many members limit themselves to 15 or 20. And others, they go 30, 35. But what we have in common is we're looking for the highest quality companies. What are the highest quality companies? In this video, we look at when to buy those high quality companies. Let's say you have picked as a high quality company Google. And right now Google is in a dip, right? It's cheaper than usual, both from a price standpoint, but also from a valuation standpoint. So you might say, okay, Google is cheap, but is this the right time to buy or not? Will the market go lower? So this is what happened. We are at VIX 22, remember? If you had bought the S&P 500 at VIX 15 and below, this is what you would have gotten. And if you would have bought at 15 and above, 4%, above 20% VIX, 7%, above 25% VIX, 3 months later, you would be in the green by 11.5%. It's different 6 months later because there can be a second dip. These things happen frequently in a bull market where you have walls of worries coming up, so multiple corrections in a row. And 12 months later, 24%, at above 25% VIX. This is why we wait for the VIX to be above 25 before we buy. And we just buy the high quality companies that we have researched already during peaceful times, because when the VIX hits above 25%, this is highly emotional times. Let me show you what it looks like. These are the emotions in the market. Markets are always highly emotional. And when the VIX is at 25, you are somewhere here in capitulation. And capitulation, this is how your friends, your family, if you're a fund manager, your clients, they call you and say, Why didn't you sell Nvidia earlier? Didn't you see it coming? What's going on? Sell everything right now. You're fired. I'm taking my assets and go somewhere else. So this is how it feels. And the media has very emotional headlines, and then usually they tie it to some conflict or tariffs or whatever is going on. And this is how it feels. That's why in peaceful times, when we are not that emotional, we create our investing system. And this is my investing system that I'm sharing with you. The first thing is, if you buy when the VIX is above 5%, historically, you are in the green pretty quickly. And the second thing is that your win ratio below 15% is 72, above 15%, 84, above 20%, 89%, and above 25%, it's 100%. 100%. And also, again, 12 months later, not 6 months later, because of the multiple growth scare, but 3 months later, 100% win ratio, and 12%. 12 months later, 100% win ratio. This is why, in order to de-risk, if you select a simple system like we do, own 12 high-quality companies. High quality means high pricing power, high return on investment, high reinvestment rate, and long runway. And then the third part is you buy only when the VIX is above 25%. And you don't buy new companies when it's emotional. You buy only the companies that you have researched very, very well and have modeled very well before that, in peaceful times, right? And then when it gets emotional, people sell everything. They sell everything, not just low quality stuff. When the VIX is above 25%, people sell everything, regardless of quality. This is your time to buy. This is when I buy. The checklist for when to buy based on the VIX, you will find it in the Sprint Club. If you're not in the Sprint Club yet, make sure to join. It's strategysprints.com, and then you try it 7 days free. And if you like it, you stay there. We are also discussing a ton of cool stuff. We have new masterclasses in there by Jay Abraham and by myself. We have advanced portfolio management techniques and many, many other things. My watch list. Make sure you have access to these things. 7 days free. Just try it out. Maybe it's helpful for you. And keep rolling, everyone.